Hey everybody, I want to go over the morning session for May 31st and show you the entries, potential setups that I saw. So I'm going to throw up my rules here. I trade the 2022 mentorship model. I'm looking for a higher time frame liquidity to be taken. I'm looking for a swing high, swing low broken from a market structure shift. I'm looking for displacement that formed a fair value gap or a PD array entry like a breaker block, a mitigation block, an order block. Entry parameters, I usually want 1 to 2 plus or a minimum of at least 5 handles. Stop placement goes below the first candle of fair value gap or above below the breaker block, mitigation block, or order block. And I will can move the stop to break even and take partials once price reaches 60% of the target. Okay, so I'm going to leave that up there so you can refer back to them. So this light gray is from 8:30 to 9:30. The dark gray here is 9:30 to 10. And from this light gray to this light gray here, this is the silver bullet hour at 10 to 11 a.m. Eastern Standard Time. Okay. So the first thing you see when you come here is short-term high being taken out. Okay. These purple dashed lines, these are new week opening gaps. So there's one here, one here. This blue line here is the midnight opening price. This dark gray line right here is the 8:30 opening price. So I'm just trying to give you the lay of the land here. It takes out this, basically stops pretty close to that new week opening gap. Price trades come back down, stops on the tick, on the bodies, on the tick, new week opening gap right there is where it stops. And then the price comes back up. It takes out this now short-term high. Okay. But you could probably extend that out to over here as well. And just right there. Now you got relatively equal highs right there. Let's change that. It's basically what you have. Highs. And then price trades through it. And where does it go? What does ICT tell us? He says price will either go to run out an old low or an old high to seek liquidity, or you'll go to rebalance an inefficiency. Okay, so when you look left, we don't really have any more, after we take out this, anymore why it's going up so high, any more old highs to take out, but we do have some inefficiencies over here. We have a fair value gap right there, we have a fair value gap there, a fair value gap right there, and then if you look just to the left, we have a couple volume imbalances right here together, right there. And if you look at it, this wick goes all the way to the top right there to the tick of that volume imbalance, comes back down. Basically it was just going into those inefficiencies to offer price. So we know it's come up here, that they're not coming back up here. If they do it, we could look for consequent encroachment here, but we would want to see that get breached if it was going to come back up. So price comes back down, creates a short-term low, comes back up, stops before that new week opening gap there, and then has a little volume imbalance right here, comes back down, and we break that short-term low, so that short-term low is cleared. Okay, why am I not calling that a market structure shift? Well, it can be a market structure shift. The problem why I don't really like it as a market structure shift is I don't see the bodies closing below it until down here, okay, which is after price trades into this fair value gap. So it does take out a short-term low. There is a fair value gap right here that's formed with displacement as it came down here. Price does trade back into it. So you could take your trade at the bottom of this fair value gap and put your stop loss one tick above the high here and go down for, right now I have it for 15. Well, that's because at the bottom here, you'd have to look and see what are you aiming for. Obviously, price didn't want to come back up here anymore. So what are we aiming for? Well, we go to a higher time frame chart, and on the 15-minute, we have this major fair value gap here in orange, and that's what my target was. So you could take this trade, and it ends up being 15 handles, 3.5 R. So that's a pretty good trade, right? Comes up, you could take this trade, you come back down. What does it clear? It clears market structure shift here. You also have this market structure shift here, which I didn't. And now why would I call this a market structure shift? Well, because this is the swing low that was the catalyst that took out the swing high. Okay, so this is the one that broke the high. So this is the swing low. So once that's broke with displacement, I'm looking for that's short market structure shift for me. Could you have traded this one? Yeah, absolutely. But I'm just showing you another option if you didn't take this trade. Okay, so I'm going to take this one off just so it quits, being so blurry on here. Okay, so now I've changed it to the dark area is now the ICT 10 to 11 a.m. session silver bullet hour. So that first trade that was right here was the 9:30 open trade you could have got into. This would be a good setup for the silver bullet hour. So we have liquidity taken, we have market structure shift. We have, we've taken it out, but there's a very small fair value gap right there. Right there. Price trade comes back up, taps that fair value gap, and comes back down. To me, that's not really very good displacement taking out this low, so I'm looking for something better than that. I see a better fair value gap right here, comes back down. I also see a breaker block right here. Swing high, swing low, comes out, takes out this swing high, comes back down, trades back into it. Could have gotten an entry out here, trades back out, comes back up into it, touches it, and that's a good entry right there. Could have taken your trade at the bottom of that breaker block, one tick above, targeting down here. That's 12 handles or 12 points. It's a 1 for 4 risk to reward ratio, and that, my friends, is a unicorn setup where you've got a fair value gap inside a breaker block. You also have this order block right here that you could take as well. You could label that as an order block because it's right here. Just did this part. You can call that order block. So you just have a multiple reasons for taking this trade right here. So that is the two setups that I see right there. I'm going to throw this other one on. So basically, one was for the silver bullet hour. You got to learn your PD arrays and be able to mark out all your order blocks, breaker blocks, mitigation blocks, fair value gaps, volume imbalances, all of that on your chart, so that way you can see how things are respecting what. That is your two, throw this one back up here, setups for the AM morning session on May 31st.